guess like you're basically saying there, depending on your strategy, you need to change what you're doing and looking at on the charts and what you're drawing.
100%.
Okay. Like that's clear to me. I
100%,
never
dude.
really had any sort of like
Yeah.
clarification over that, but it's subjective depending on what you're doing, basically, or what you're. Is I don't know if that's the correct way to put it, but
Well, I would say it's like you should adjust. You know what I mean?
yeah,
Or
okay.
pivot. So, and you know, like, CT knows this about me. Like, I'm always really pushing on this. Like, you've got to adjust your expectations when you're planning or getting into trades. Like, you can't enter solely on a 1 minute level and expect like this big 25% move. Now, if that 1 minute level lines up with a daily or weekly level and that's what's going to happen, that's great. You know what I mean? Like, maybe you got lucky, but you got to see, the big picture. You got to see all sides of the coin. You know what I mean? And sometimes that coin is not just two sides. Sometimes it's 4 or 5 or 10, but you really hit the nail on the head. Like, you really, really have to adjust. Super important. You have to adjust the way in which you approach TA because it's so freaking subjective, man. Like, there's so many things. There's a rule set, you know what I mean? And when I say rule set, I use that softly, like it's not like gravity.
Swing structure and levels would be like the base foundational rule set, and then anything else beyond that would be kind of, I don't want to say subjective, but like, is that correct?
Well, yeah. So I would say, what you're saying is swing structure, which
That's a hard rule.
It's market structure, right? So like if I go to
exactly.
like the daily here, let me get rid of these fellas there. And I'm just going to kind of arbitrarily I'll go to a 4 hour to make it a little less convoluted. All right. So if I go to the 4 hour, right, and I had a high here, okay, and then before that high, I had this low here. All right. So this high right here and this low. So we're in an uptrend. Now, this high should have been gained. And if I really want to kind of zoom out to make it a little less confusing, I would just say this. All right, so let's do it this way. This high, we're in an uptrend, right? And then we have this low, which created this high. This high is weak and should be gained because we should continue the uptrend. That's all we can do is just follow the probabilities. This low that created that high should be lost. You know what I mean? Like, or should hold. I'm sorry. I misspoke. That should hold. Now, what we can see here is that can't hold true indefinitely, obviously. Otherwise, we'd be in a freaking perpetual, bull run or, bear market. You know what I mean? It would just be indefinite. And we'd never have highs and lows and whatnot. So at this point here, we have, let me go to this, get back to there we go. So at this point here, we have this high and this low. Now we can see that, I swear it was that, yeah, I had it there. I must have hit the undo button too many times. So we had this high and we had this low. Now, this one should have held because it was a strong low because we've been in an uptrend and we've been in an uptrend for quite a while. Now, obviously that can't just hold true indefinitely, right? Like I was just saying, and this one would have been a weak high. So we should have gained that. Now, your first sign was when this happened on a lower time frame. We had this big spike here, and then it was lost immediately, and we lost that important low. And then your second really big sign was when we back tested that. Yeah, obviously, like we dumped into oblivion, like from there we went down, almost 12%. Like that was your second big sign. And there was a lot of signs in between here, you know what I mean? Fractally on lower time frames. So you have to adjust these things, man. Like, do you want a position trade? Are you looking for a bottom to get in a trade for 3 months, 6 months, a year? Are you looking for a scalp for like 1% or 0.5% or 1/4%, or a swing trade for 2% or 3? We have to set our expectations in mind, open up the charts, look at them, and then build our narrative, how it best suits our expectations, what we want to get out of it. Because if we don't know what we want to get out of it, what the hell are we even looking for? You know what I mean? We don't know. We're like just like, stabbing in the dark. We have no clue. Do I want to scalp or do I want a position trade? Like if I don't know what to look for. So I think that's one of like the most important things to kind of, suss out for people. Something I struggle with personally for a long time is that I cannot approach the charts in the same way in which someone looking for a position trade or a long-term swing trade is approaching. I can't. I want to get it in and out of a trade. I want to get my 2 or 3% in a day or two and get out. Whereas somebody may have way more money than me and they're like, hey man, I just want to get in a trade and get in a sweet spot. And I got a, 5% stop loss on there and let it ride for 6 months or a year. So obviously we're not going to approach the charts in the same way, but I think that's the biggest hurdle that people need to recognize and overcome in the beginning. And our pride and our ego really kind of combats us in that struggle because we think that we have to be super, super accurate in everything that we do, especially if we're perfectionists like I am, like I'm always trying to be the best or perfect or blah, blah, blah. And while that's all well and good, it can also be a detriment if you allow it to be. So we just have to kind of learn to, kind of ease up on our expectations, ease up on the things that we expect or suspect and expect, and just kind of, learn to pivot a little bit more, like be a little softer in our grounding, if that kind of like resonates with you.
Okay, yeah, well, I guess what I took away from all that is, depending on your trading style, it depends on what you draw on your charts, basically, and what you look at and what you target.
And which time frames that you draw it on. Because
yeah, exactly. Like
okay.
Exactly. I didn't
Okay.
add that in there, but that's exactly it. Like if you're
okay, yeah,
exactly, because if you're going to if you're going to scalp versus position trade, you need to look at anywhere from, I guess, a 1 minute to a daily, as opposed to position trades would be anywhere from what? Well, higher time frames versus lower time frames, basically, right?
Yeah, exactly. Yeah, put simply, I would just say, you got high, mid, and low time frames. So position would be lower mid time frames to high time frames, and then swing trades would be, the top part of low time frames to high mid time frames. I know it's kind of confusing, but let me just put it a little bit more simply. So I would say okay, yeah, I figured you would get it.
I 100% get that. Like,
okay,
or like even from watching material, that's a correct understanding that I took away from it is,
he got that.
Depending on your trading style and what you look at different time frames, like a scalp would be, anywhere from 1 minute to a daily. or like you
Mhm.
probably even you want to stay under a 1 hour even, or like 4 hours.
Mhm.
I would think would
Mhm.
be like your more the time frames that you're looking at more often, as opposed to a position trader would be, I don't know, 4 hour and up. I would think.
Yeah. 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 For position trade, I would. I mean, obviously, if you're taking a position trade, you can look at a 1 minute, right? You can look at a freaking 1 second to get a super precise entry. Is it necessary?
Yeah, I just
Not
consider that
really. You
necessary.
know what I mean? It's not necessary. Um, so, roughly speaking, what I would say is like if you're looking to position trade, then what you should really kind of looking at an average income or account size, however you want to put it. I would say look at a you know monthly, weekly, daily, 4 hour at the lowest, really. And then for a long term swing, I would say look at a 1-4 daily, weekly. And then for a short term swing trade, and by short term swing trade, I mean like 1 to 3 days. I would say look at a 15-minute, 1 hour, 4 hour daily. And then for, because I kind of categorize these, for a long-term scalp or intraday trade, as a lot of people like to call it, I would say, you need to look at a 5 minute, 15-minute, 1 hour, 4 hour. And then for like a really minute short-term scalp or intraday trade, I would say you'd have to look at a 1 minute, 5 minute, 15, 1 hour, and then a 4 hour for like a overall kind of bias. But the thing you got to keep in mind is that all of those things, you got to be aware of what the higher time frame is doing. And what I mean by that is that if the daily is at a point in which it's going to pull back
Yeah.
and kind of go down, you can look at all those smaller time frames if you're scalping, and that's all well and good, and you may have all the correct information, but if you don't realize that that daily is about to pull back and at a very important part, you might lose sight of the bigger picture. And
Yeah, exactly.
that's where people tend to get their butts handed to them, and they're like, oh man, like I was correct, but then blam, it dumps, or it pumps, vice versa, whatever.
Yeah.
Like we've all been in that boat, and it's a really crappy boat to be in, unfortunately. But that's the boat where you tend to learn a lot, unfortunately.